Hello, everyone. I hope you can hear me. If you can hear me, please use the emojis and react.
Haya, sasa walikuwa wataka accommodation mpaka
Hello.
Yes, Gilbert, we can hear you.
Okay, that's good. Thank you. Yes, good afternoon, everybody.
Good afternoon,
Yes, good
Gilbert. Is that
afternoon, Gilbert.
Yes, sorry, network issues disturbed, but I'm glad we are all in. Everybody is most welcome for this meeting. It's a full house. Yes.
Nice to hear from you.
Okay, thank you, thank you. My name is.
And I'm happy.
Pardon?
I'm happy to be here.
Okay, thank you. Let us begin by looking at the faces of everybody present. Put your faces there so that we see you, because the house is so full, and because of its fullness, it may not be possible for us to go around the room. Do you feel we can? It's a democratic situation. Do you think we can go through the room? It's very big. But put your faces there. We take a photo moment to indicate that we are all present. And thereafter, we shall proceed with the meeting. Okay. I can see I can see the main presenters. I see Dr. Muhumza, you're welcome. I see Catherine. Catherine, we are glad to see you. I see many people from Uganda Debt Network, and I see many others. So you're most welcome. And on that note, I'll ask Canon Joyce Nima, my old friend, whom I see in there, to lead us in a word of prayer. Canon Joyce, hello.
With pleasure. Without pressure.
I'm glad to see you, Auntie
Canon.
will
come to you.
Pardon?
Yes, I'm glad to be able to pray.
Yes, please.
Loving Father, we come to you this afternoon, thanking you for the things you enabled us to do during the last few. Thanking you for the far you have brought us to this day. Thanking you for the people who have contributed towards gathering information we are going to discuss. Father, you know the plans that you have for us. You have promised us that you have good plans for us as individuals, but as Ugandans. Plans to prosper us and not to harm us. Plans to give us hope and a future. Father, under the circumstances that we are in and based on the discussion we are going to have, many people are disillusioned as to what hope and future Uganda has. It is only you who can direct us and guide us to think carefully, advise with wisdom, that those who have to take such profound decisions can listen to us, Father. They can listen to the voices of even small people. They can listen and learn and know that whoever has got something to contributes it for the good of the country and also for the good of God's people who are here in this country. Uganda is a Christian country dedicated by martyrs. We know how much we should value our Christian values and value people. Father, give us the wisdom. Give us the wisdom to be able to deliberate wisely, but in love and with meekness, and that whatever we say will be listened to, even by the remnant of those you would have chosen. Choose a remnant, a small group of people to listen and hear what we are saying. Everybody does not have to hear, but if a small group of your remnant are able to hear this, Uganda would be the type of country that you would like us to be. So it would be a country where we are all very satisfied that we are doing our best and that we care for each other. We submit our discussion into your hands, Father, that you will guide us and that the chair and the other moderators are going to guide us to have a fruitful discussion. We come to you trusting in the love of our Lord Jesus Christ. Amen.
And all the people, the Lord's people say amen. Thank you, Canon.
welcome.
I have to declare conflict of interest that Canon Joyce Nima is a great friend in many ways, so I had to give her the opportunity to do this. So as a way of introduction again, and I said the room is big, we may not go to all, but basically we have to introduce the topic. Today's discussion, it's mixed. Some people are physically present with each other, but others are online. So, but majorly it's virtual. And we are focusing on our theme, which is a reparative justice policy dialogue on East African debt crisis. But actually, we may not over-narrow ourselves only to East Africa, but we can go Africa-wide and if need be global, because there are some other economies that share some characteristics with Uganda's situation in terms of debt crisis. Uganda, East Africa, and Caribbean countries. And we have panelists. I'll ask my colleagues, Janice and Penny, to ensure that I have not seen Hilda. I asked Dr. Enoch, I gave him the link. You'll be sure that they are all in. Yeah.
Gilbert, are you still on?
Hello, Gilbert. In the meantime, as Gilbert is coming back on board, I would request probably the panelists to introduce themselves, those that are already here online, as we wait for Gilbert to rejoin again and pass through the whole program. Thank you. I'll start with Doctor, if you are available. Is Dr. Muhums around?
Yes, I'm around.
Can I also hear from Dr. Enoch Tenoblio? Probably as Dr. Enoch enters the room, can we also hear from Catherine from AFRODAD?
Hi, Janice, I'm here.
Hilda, are you available? Oh, all right. Let me check that, Hilda.
Oh, sorry. All along, me, I was hearing you, but apparently the voice was off. Apologies. Hilda answered in the affirmative that she was present. Dr. Muhumza, Dr. Enoch had joined, and Catherine did join. So I want to extend apologies to the members present that our executive director, Mr. Patrick Tumwebaze, is not present. He got some discomfort. He's not fine. but she has extended apologies, but at the same time, appreciated in advance everybody who is going to participate in this meeting and all those who participated in the preparations up to this stage. My name is Gilbert Musinguzi from Uganda Debt Network. And yeah, I see Enoch present. He's saying we should unmute. So Enoch, you're welcome. The remarks on behalf of the executive director are the effect that we appreciate the support that partners have provided, including especially AFRODAD and CIATINI and the professionals, the professional academicians, the likes of Dr. Enoch, plus the Tanzanians, debt fraternity, and the like. So without much ado, I think let me ask Dr. Fred Muhumuza to give a keynote address. Dr. Fred Muhumuza is the chairperson of the board of CIATINI, but at the same time, a long-term partner and a member of Uganda Debt Network. In case I have forgotten something, Dr. Muhumuza, you can add the name, but we prefer to call you Professor. Whether you accept or not, I would rather refer to you as Professor Fred Muhumuza because you have really earned it. Please welcome me. So join me to welcome Dr. Muhumuza. Thank you.
Thank you, Gilbert, moderator. Literally two corrections. I'm not on the CIATINI board, leave alone being chair. I don't want to impersonate there. That's one. Two.
Sorry, AFRODAD.
Yeah, I'm on the board of AFRODAD, but also not chair. I'm a trustee and member of the AFRODAD board. And so this is really a privilege for me to make input into this important conversation that we have and also share views that will hopefully take us through. I wanted to see how my presentation can be shared. When I have the icon here for sharing, I don't seem to have the rights because that will help us move faster. Is there anybody with my presentation who can share it?
I think Penny and Janice are going to work on that.
Yeah, because I had shared earlier that I needed rights to share, but maybe my message was not seen, but they can help and share those who already have it and have rights to share in this forum. As it comes on, I looked at the topic that we have on reparations and justice. And then there are lots of things that are in there to do with the debt. Is it colonial, post-colonial? So I made a title that is really trying to shoot in the middle of all those things. And my ending question is, where does justice lie? Because sometimes we want to engage an active space, but history quite often might go with us from the past. I present a case of what reparations are and what they're intended to do. I begin to question in my presentation the reality of why we should not lose that agenda, what areas should come on board so that we are not entirely exposed to one thing. Yeah, you can put that in presentation mode. Thank you. And I put a lot of text, really not for this presentation, but for people to make reference to. And that's me. I'm also a director at the Makerere University Business School Economics Forum. Let's go to the context. Yes, please proceed. I present a context of the debt vulnerabilities in Africa, which are quite high. The debt to GDP ratio for a number of African countries, if you pull them together, we're on 67%, but that will be an average, meaning there are countries far above that. We have debt that is going on to almost $1 trillion, as data will be coming in on who else has been borrowing in the recent past, but this is mainly for commercial and bilateral creditors. Now that begins to speak to our concern of who are we talking to when we talk about reparations. If you have commercial debt and bilateral debt and multilateral debt, then already the question becomes a mix, that relating these to reparations can only come in with a caution on how far and who else are we not talking to, but is part of the debt, but certainly possibly not part of reparations. So is it reparations only to give us the answer, or be ending by a call on broadening that conversation, not just to the colonial masters and sovereign countries? So the question is it from chains to loans, or are we having loans as our chains? And then we discuss the trajectory of debt, especially for Uganda, to see what else has happened in the last set of years where we do not have the colonial masters again calling the shots, but maybe indirectly and not necessarily colonial masters, because the current shots on the debt architecture are being driven by even countries that did not colonize us, but they are part and parcel of the loan infrastructure. Let's move to the next slide, please. So the objective of the meeting, I picked it from the concept note that was shared with us, that want to have a deep understanding of the direct and indirect causal links between the colonial era injustices, exploitation, political subjugation. Then also want to articulate the case for reparative justice as a fundamental framework to address both historical harms and current debt burdens. Want to do an exploration of and propose concrete reparative policy responses, strengthen the regional solidarity, but also generate key insights that will go to AFRODAD 5 in Ghana. Next, please. I provide some definitions for those where this subject may be new. That international human rights law recognizes that victims of state violations of human rights have a right to reparations by the state, and where the state is not liable either for omission or omission or any other reason, then the reparations may not necessarily apply. I don't know, we are mixing up slides, please. There is a restitution, which is basically meaning you want to restore the victims to the original situation, compensation, and I provide definition for those, as I've said, for purposes of people to read through. Let's move to the next slide, please. I define injustice and valuation. These are some of the issues really that come up if one is to even say, let's move with reparations. There are some complexities that we may want to address as countries and as civil society. One, because the implementation will require clear understanding of the specific needs, where what are the needs of those entities? How do we design funding and administer programs that will speak to them? Because the reparations we're talking about, the injustices were done way back in time, decades ago. So you can't just come and say, because slave traders took away people from Africa, we are compensating the current generation for that. All sorts of things. So there are issues on the design of these programs, which I'm not very sure our governments in Africa will be able to do, like a victim-centered approach, because reparative policies require to prioritize the needs of the and perspectives of the victims. So how do you do that? If countries and governments are no longer doing this, but they will be in charge of programming for the reparation proceeds, then you have more work to advocate for internally, not necessarily with the colonial masters or the previous colonial masters. The context does matter. The measures should be tailored to the specific context of the harm. And as we said, sometimes the harms have changed. The people right now who would benefit from these reparations are not necessarily the ones who experience the harm. But as communities, they are part and they are entitled to these benefits. Next, please. Again, there are issues of which populations are we talking about? If it's the current Africans, then whose policies are we to blame? Because the reason I'm raising this is some of the victims of the colonial era are suffering from policies of the current regimes and the current positions, both in Africa and outside Africa. So we still talking about Churchill and Thatcher of 40, 50 years ago, or even 100 years, or are we now dealing with the injustices arising out of the current global leadership? You're looking at Stammer, you're looking at Trump, you're looking at Chinese Xi, the president of China, people like Putin and Netanyahu, because we are seeing these as current issues, but this is the context we are talking about, much as the roots of the discussion are in history. You may find that current generation that would benefit from reparations are suffering more because of the policies of the current global leadership, as opposed to the history of what leadership was there 100 or 50 years ago. How do we address systemic issues behind the violations, and then making sure it is a long-term sustained intervention? You don't want to just give money and 5, 10 years from now, nothing has happened. Next, please. I raise a question really based on the current events. Are we being diverted to measure on the minors? Reparations, definitely we don't want to lose sight of that. But what else should we bring on the table? So we want to measure on everything that matters to us, especially when we're talking about reparations, we're talking about debt, we're talking about injustices, abuse of human rights. Some of these are now more significant in the current setting because of the different dimensions that have changed. So can reparations work? Does international law work anymore? Because this is where we are rooting ourselves. But we know what is unfolding in Gaza. The international law seems to be unable to solve the current Gaza crisis. So do we still have trust that entities will believe and respect international law? Is that a good locus, or we need to beef it up with other things? And it comes at a good time that this week we actually been marking 80 years of the nuclear bomb by the Americans on Hiroshima and Nagasaki, which was dropped actually on 16 hours on that date. We called the bomb the little boy, quite a heavy bomb. Hiroshima literally had 420,000 people. Of these, 70,000 were Koreans, but these Koreans were not there by choice. They were working under forced labor, just like the conditions we are talking about here in Africa, and had been picked by the Japanese from Korea, which had been their colony for 35 years, and taken into be forced labor. So they literally died a death they should never in the first place have died. Have they been compensated? Of the 70 people who died instantly, 40,000 were these Koreans. But even those who subsequently died over the years because of neglect and lack of care, the Koreans who were involved in the bomb and experienced that bomb died at a faster rate or a higher rate than any other generations of the Japanese and other people. Where the average death of those who died after was 33.7, Korea was 57, meaning they died more because of lack of care. Reparations maybe would have helped them. And the bold there is neither Japan nor the US has apologized. This is for 8 years, but both are still talking about peace. Now we are saying if that is the situation, what options and chances does Africa have over similar things which are not even equivalent to the nuclear bomb that the America dropped on the Japanese and the Koreans? Next, please. So what should Africa and Uganda be focusing on? One, the colonial governments responsible for the current predicament of debt and poor development indicators is one thing we may want to focus on, and these for mere questions now that we are setting a base for discussions. What are the current levels of governance, accountability, and protection of human rights? Is what is happening on the African continent a consequence of colonial justice or the current leadership? And if we come into reparations and payments, who should receive these amounts? Who should manage the process as well indicated up there? If you see the same current governments, then many of them may not get what they are expecting. Is the current global trade and finance architecture conducive for Africa's development aspirations? So while we are looking for reparations, we need to add to the conversation on what is the current architecture like, because it might be doing more harm than actually the discussion we are having on the table. Or if it's not, we will get more value by broadening that conversation beyond reparations and for justice. Next, please. I'm saying, how best do we deal with a shared volatile ecosystem? Africa and many other countries are not going to get a free ride. Neither are you going to get protected. I've had a quote when President Nyerere said, how can you lump the heavyweights with the lightweights in the same boxing ring? That would be okay if the world was able to be organized that way. We cannot just blame our predicament on the law of the jungle, because that's what literally reigns. The lions, the elephants, the wild beasts, the antelopes all live in that same jungle. And nobody is going to put fences and say the lions the other side, the elephants this side. So quite often Africans, activists want to expect a fair right in the world, which world is literally jungle law. Now, how do we engage that jungle law and make sure we still exist? The cobs and antelopes and wild beasts would have left the field, the wilderness, if they had an option, because the lions will keep eating them. At times, the lions will want to eat a cub of an elephant, quite a big monster. Next slide. There was, I think, an internet hiccup. So I'm looking at debt, and the rest of my presentation really is to say, is the current debt situation in Uganda related to colonial history? Or could there be a case that we actually, our own leadership, our own strategies, our own behaviors have a lot more to do with our debt situation, that even if we got our reparations, unless we fix our backyard and internal dynamics, we will not benefit from the reparations. So I look at the urgent debt of the 80s, which was driven by exports were declining, countries needed to be renovated, especially in Uganda after the war. And by June 1993, the stock of undisbursed debt had increased to 2.6, which is literally like 10% of where we are today. Arrears were at 253. We had a debt sustainability report of 2023, which is actually showing that debt is up to 23. That's by 2023-24. It has now gone higher. But I wanted to compare this, which is like a 10%, that in a very short period of time, our debt has gone up. If you compare 1993 to 2023, you have a 30-year span when debt had increased. But this is not the whole story, because within those same 30 years, there was a debt forgiveness, multilateral debt relief initiative, and highly indebted poor country debt network, which reduced Uganda's debt to less than $1 billion. So if really one wanted to look at Uganda's debt, the reference point should be around 2005, 2006, after MDRI reduced our debt to less than $1 billion. So the 23 billion we are talking about here is a product of just about 20 years. And literally, not the entire 20, but maybe the last 10 years. Next slide, please. So the debt levels have been a concern for quite some time. The crisis, 1982, 1970, that is literally to give people context that debt has been a problem for Africa and for Africans and Uganda, and literally because of systemic issues, not necessarily whether you're a colonial country, a colonized country, or non-colonized. The oil price shock of 1970-73 sparked the debt. A lot of money was available out of those revenues, which was dumped in banks, so banks were eager to lend. So the countries in Africa massively borrowed because of the events of the 70s, the early 70s. And by the 80s, debt was strangling African countries, including Uganda. Next slide, please. And interest rates have been going up, meaning even your previous debt is giving you a very big cost when it comes to compensation. So for many countries, substantial increase in external debt matched by a rapid export growth. Between 73 and 81, countries in Asia were following a different script. For them, they acquired the debt, but also promoted faster growth through exports than in external debt. For us, we grew more by borrowing, and we still do, rather than saying, can we find a pace at which we'll grow so that we do not incur excessive debt? Our friends in Asia have been very smart on that for the last 30 years. And many people will pin this to say, because they have not used the World Bank borrowing. No, it's because they have not used the wrong policies as countries. They have evolved their own country-related and specific, context-specific policies, which they have followed, and they have pursued and been able to sustain their growth. Next, please. So the wrong policies have really played a wrong central role right from the beginning. Policy responses to external shocks, which were central, factor explaining the country's subsequent payment difficulties. There were external shocks, but also there were internal policies to offset the terms of trade deterioration. Countries were not exporting. There were declines. The structural adjustment program literally came to adjust the structures of these economies. It was easier to borrow than fixing the domestic challenges, which were like privatization, liberalization. The state monopolies were not making money, but countries continued to put money into them. Those state enterprises, the structure of the countries, overvalued currencies, all these were wrong policies that pushed Africa into a situation where entities simply went out borrowing instead of resolving the underlying structural issues. Now, we need to engage that in addition to the war reparations to say, colonialism aside, what else went wrong after the colonialists left? And we engage that as well and fix it. Are we fixing it now? We are not. Next, please. I look at that just 20 years ago, debt was a very small thing in Uganda. External public debt disbursed and that disbursed was very small, much as it was growing exponentially at an average rate of 30% from 2017 up to about 2015. As you can see, the debt increased from 2.45 billion in 2007 to 6.7 billion in February 2015, and was 25% of GDP. So you had a big jump between 2007 and 2015, but that is not all. Now, even the 2007 was an increase from less than 1 billion in 2005. So the commitment fees kept on increasing, reflecting inefficiencies in institutions, and I was deliberate to put the institutional agenda in the topic so that we do not ignore the need for relevant institutions. Next slide, please. So there are concerns by the Auditor General. The evidence we can't say is not with us. The public debt has increased at unprecedented levels. This was Auditor General reporting. We reached 52% of GDP in June 2023. Some people will not agree because they still wanted to make us believe that we are below 50%. The amount was excluding the 7 trillion, which was coming up on schedule that was in Parliament. By December 2023, the Bank of Uganda reported that the escalating debt service costs were a strain on tax revenues, with 32% of the tax collections going to debt service. We have that figure above 32% as we speak. So the rising public debt, coupled with growing domestic service costs, tends to stagnate tax revenues, but also affects exports and puts Uganda into a debt distress or greater risk of debt situation. Now, these are our own decisions. We cannot put them within the context of the colonial masters. And therefore, even if we were to bring in war reparations or reparations for justice, and they find us in this situation, we would not be able to pick up the benefits expected. Next slide, please. Should be done in about 5 or 8 minutes. So Uganda carries a debt, and this was a monetary report of 2.3 million per person. by at least March 2025, that excessive borrowing at very high rates is not only crowding out private sector, as economists will tell you in the past, but even the public sector itself is being crowded out. Because as we're going to see, debt minimizes government out of its own budget space, what we're calling fiscal space. That the budget of 72 trillion, about 45% of that is debt. So meaning debt management, meaning government itself is squeezed out of the budget space by the debt. So that is not only crowding out private sector, but also the public, and making the public unable to deliver basic social services, things like education, health, basic infrastructure. I hope we also, the roads that Katumba Amara told us, these ones I'm not going to touch, these ones will be slow. And yet we know the road situation is ugly, but this is linked to debt, and but also the other things like elections, money, that's where the money is going, but elections are a spite. They only came in, our roads have been a problem for quite some time, so we can't put all of it on the elections. Next, please. This is really the domestic borrowing, which has increased by 57% in the last 2 financial years, and with almost 50% going into debt restructuring. That even when we borrow money, the light orange is refinancing. And as you can see, it is quite dominant, that at the end of the 2 years, in financial year 23-24, the total bulk borrowing was 15 trillion, of which 8.4 went into refinancing. So it was not available to provide services, which is the point that debt is crowding out government itself. In financial year 24-25, we borrowed 23.5 trillion, of which 11.4 went into refinancing. It's important to note that in 24-25, government had promised to borrow only 8 trillion. Or rather even had promised to borrow about 4 trillion. Now you can see we went overboard by close to 20 trillion from what we had planned to do. So these are debt issues that we may not want necessarily to pin on the colonial masters, but engage those who succeeded them, the post-colonial regimes, without forgetting, of course, the colonial masters. They shouldn't get off the hook. But I'm more concerned with our current status. Reason being, even if we are to get the reparations and they come into this, you'll find they are going into refinancing rather than meeting the objective of putting people back, as we saw earlier, the definitions of reparations. Next slide, please. This is the government of Uganda domestic borrowing. You can see the escalation from around 2018. The black line is private sector credit, and you can see it is closing up. Governments will try to leave as much of the money into the banking sector so that it goes into private sector credit. That increase in the red line is kind of cannibalizing resources that would have gone into private sector credit, which is growing at a steady pace. We don't see an escalation on it on that black line. So that for me is a concern that if this red line continues at that trajectory, we'll soon have more money going into credit to government than actually the private sector, which drives economies to grow. Next, please. So I have a quote from Amos Sunday, who says Uganda may become caught up in a public debt safety trap. What do we mean? You set yourself parameters that you are comfortable with. My debt to GDP is still below 50%. My tax to GDP is still this. And we've had a lot of that discussion and talk coming from government. So what we call the public debt safety trap is where a favorable debt position, largely based on traditional debt sustainability metrics or indicators, falsely signals that the country has fiscal space, that the country can actually borrow more, the country is not in distress. But you are really using crafted indicators that do not reflect the reality. So, and I put a note which I've always emphasized, that the use of debt to GDP ratio as a measure of debt sustainability, it gives a wrong impression because it doesn't speak into the technicalities and realities on the ground. Japan has the highest debt to GDP ratio, but Japan lends its money to the US and picks enough money from there to settle all its debt obligations. So it doesn't even touch its economy. As you know very well, Japan is the biggest buyer of American bonds, close to $1 trillion. So they make money from there, pay their debt obligations. But their debt, the structure is very low interest rates. But also Japan has a declining population. If I think the third successive year running, Japan lost over 1 million people, close to 1 million people net. The people who died were more than the people who were born by over 1 million. So that's a different context. You can't just pick that figure and bring it to Uganda and use it as a measure of saying what is the debt distress. So we are running a danger of comforting ourselves when we shouldn't actually be comfortable, but because we have set the parameters wrongly. Next, please. So there are new players, new debt drivers, and new dynamics. 2014, China accounted for 70% of the total new borrowing for Uganda. So if you're talking about colonialism, China will not be in that picture. But look, it is 70% of the total borrowing, of which 41% was from the China Exim Bank. And that also worsened the situation because money we pick from the Exim Bank is not debt loans for renegotiation. Theirs is an export-import bank. So they will say, whatever money you pick from there, we facilitated you to import from China. And that is the bulk of the money we picked from China. So the Entebbe Expressway is not funded by a loan. If you wanted to restructure loans, that is not on the table. And it's a very big loan. It's a very big amount of money. China would tell you that was my export to you. So don't restructure or think of restructuring that particular loan. So 70% of the money we picked from China are not for negotiations because they were not necessarily loans as per their technical definition. So as a result of that mismatch between concessional loans, increased infrastructure investments, Uganda continued to increase its concessional and non-concessional loans at the same time. Next, please. And the threat of domestic debt, I want to really end with the domestic debt agenda before I get to recommendations. At the end of June 2015, the stock of public domestic debt was 9.9 trillion. That represented an annual increase of 38% in that stock between that 1 year, the literal of 2015 and 2014. Since 2013, domestic debt stock has been on an upward trend with an average growth of 30%. As we speak, the total domestic stock as at the end of June 2014 of 9 trillion has grown. Let's move to the next slide and we'll be able to see what is happening to domestic borrowing, what we call net credit to government. Next slide, please. Yeah, this is the situation of imports. We have already seen the net credit. This is the situation of imports, that we are back to our challenges that we had before. The black line is showing our imports. And you can see the red line going down is showing our balance of payments, that we are already in a trap of balance of payments. We do not have, much as we're exporting, we are still losing out a lot more. Our exports already include, the total exports of goods include gold, and we all know the store of gold. The bulk of it is transit gold, so we cannot claim even the proceeds that are coming out of it, besides it strengthening our exchange rate. Next slide, please. So as a way forward, what am I saying? One, as in the past, we must broaden the discussion. The spread of serious debt servicing difficulties among developing countries in 92 brought in our creditors and ourselves and others on the table. To resolve those difficulties, there was a coordinated effort by the debtor countries, the officials, the banks, the creditors, international financial institutions. They all came together. They were addressing some 3 aspects to guide the creditor and debtor countries, commercial banks, international institutions, to come up with countries that would speak and strengthen our countries. And those were designed literally not just to throw away the debt position, but to restore sustained growth. The last slide. Because we're there, I want to list the 3 aspects. Yes. One was how to link financial support effectively to economic policies. And we need to get to that because our policies, as we know, are not linked to the financial support, both in country and the one we receive from out there. The linkages are weak. 2, how do you provide payment relief so that these countries can put money where they should be putting enough money? We don't have money for roads, for health, for education, because of this debt problem. And as we said, This is no longer the colonial problem. It is our own domestic borrowing that has really put us to the fix. We have already been receiving debt forgiveness, HIPIC, multilateral debt relief initiative that reduced Uganda's debt to below 1 billion. In 20 years, we have put it back to almost 25 billion. This is something we must engage as policymakers and activists. These concerns are to guide and how we coordinate and support a large diverse of all these credit groups, the multilateral, the bilateral, the commercial, the domestic individuals. You can now even see government wants to borrow from people 100,000 of saving. So these are for me the discussion that we can engage. Thank you very much.
Yes, thank you very much, Doctor, for your wonderful presentation. It has been very insightful and very relevant to the topic of discussion. Those that have joined us, thank you very much. And those that have questions, you can raise up your hands so that Janice can allow you in. And or probably you can share them in our chat. We shall send them to Doctor. Will be able to view them, and he'll be able to respond.
Just please, Joyce, you can go ahead and ask the question.
Hello, is my volume off or people are off? I'm not hearing people. Yeah, I finished my part. Thank you very much.
I hope all of us have their mics unmuted if you want to ask a question. I see Canon Joyce Nima's hand up. You can please go ahead and ask. Any question? Joyce, we can't hear you.
Janice, I'm seeing Hilda mentioning that their mics are disabled. I don't know. If at all they're unable to if their mics are unable to be they're unable to be muted, probably they can go ahead with a panel. Then we shall come back later.
Let's go ahead with the panel. Thank you.
Hilda, is everything fine? Is your mic okay before we start? Janice, if you first work on Hilda, then we can proceed.
I think, Penina, we could continue with the panel, and as the microphone for the other participants is sorted.
Okay, no problem. Is Gilbert back? Gilbert, I see he's on, but
Hello? Yes, I'm back. Please, Penny, help me to get updated because I've missed a lot. If
okay,
at all.
right now
I
we are
presume that Dr.
Yes, Dr. Muhums has finished his presentation, and we are going to have a plenary after the panelists have shared their insights. So right now we are going to dive into the panel discussion, so you can continue from there.
Presentation. Yes. Okay, thank you. Apologies.
Yes, Gilbert, is everything okay?
Yes, I propose that Dr. Enoch goes ahead and presents on the topic assigned to him, and the question we are asking him is twofold. One, that does our indebtedness owe its genesis internally or externally? Is it exogenous or indigenous, or a mix of both? Could you elucidate? And then secondly, Dr. Enoch, we are saying infrastructure-led borrowing and external commercial loans seem to be shaping the public debt dynamics. We have heard Dr. Muhumza talk about Hiroshima and Nagasaki 80 years down the road, a long history. But since then, we have seen Japan advance to a most developed country among the most developed. Our kind of program could help a development, and how can it be viewed in the broad spectrum of urgent citizen-centered social service sector investment needs? Please, Dr. Enoch Twinobudio Nyolekwa, go ahead and let's ask on that. Thank you.
Thank you, Gilbert, and I hope you can hear me quite well. I think related to the first question,
yes,
which is whether our indebtedness is internal or externally generated. It's a mix, and I think Dr. Muhammad has alluded to it. We do have our historical experiences, which were predominantly driven by the external community, particularly the donor community. When we had the structure adjustment policies, a lot of the fiscal reforms in the early 90s, where we were selling some of the state corporations in order to reduce our debt, but also some of the reforms came along with increase in debt. But that increase in debt was happening when we hadn't built sufficient capacity. So that also led to loopholes in there, in that the money that we borrowed at the time did not necessarily lead to optimal returns. And subsequently, that's why we went into a cycle of debt relief in the late 90s and eventually in 2006. And as Dr. Mumza informed you, we reduced our debt at the time to less than $1 billion. But then, what are some of those factors that really drive our domestic debt? As we talk today, looking at our debt profile, 48% of our debt is actually now domestic, and the external is 52%. So in that, it also explains that there has been great appetite for domestic debt. One, of course, the ease in government being able to raise financing from the domestic community, but also because a lot of the saving groups within the economy do not have alternative investment options. And they have, in very recent years, there's been a great uptake. But one of the key issues that drives both domestic and external is the issue of stagnating with a low tax effort. For a long time, our tax to GDP has stagnated at about, at about 13%, and 13% is really is what you need to meet the basic functions of the state. But also, tax effort and tax collection is the basic indicator of state efficiency in being able to organize, mobilize, deepen, and also it also reflects in part lack of civic trust. So I think that's one of the main drivers as to why our tax efforts, our debt is internally driven. As you know, with the establishment of the Public Finance Management Act in 2015, we do now issue and also moving away from a monetary targeting regime where we used to target money supply as a way of managing our monetary policy. So at the time, we would use treasury bills and bonds for managing of inflation and other goals of the economy. But then when we shifted, we now do exclusively issue these securities for fiscal purpose. But one of the other more important drifts, and I think that that also links to the second question, is the issue of moving away from the poverty reduction, the PRSP, poverty reduction plans. At the time with the poverty reduction plan, they were predominantly driven from the multilateral and the bilateral support. And at the time, we also had a poverty action fund where we had ring-fenced financing to the social sectors. Now, then came in 2006, about there, led by the World Bank, they did a country economic memorandum, and they emphasized that infrastructure was a way to go. And Uganda, of course, for a long time, even today, still remains at a crossroad in terms of huge infrastructure gaps. You have huge human development gaps. And then at the other end, you do not have sufficient resources. Your tax effort is quite low. So at the time, the idea was that going infrastructure helps to open more opportunities, creates more productivity. And subsequently, this country economic memorandum guided our first national development plan, which came with an emphasis on infrastructure. At the time, we also created the Uganda National Roads Authority. We saw their budget, which was about 650 billion, grow to more than double that amount. But at the time, we were not prepared. We hadn't invested in the ability to invest. And of course, some of the challenges that subsequently emerged were in how we were investing. But fast forward, also what we saw is that the infrastructure investment wasn't wrong, but it was the sequencing of the investments that were being made, the productivity of the investments, the preparation of those investments, which we see in the public investment management space. And the fast forward, also the World Bank came and did a study and showed, but wait, we are investing. And for every dollar we're investing, we are getting 0.8 cents of getting for each dollar we invest, we get back 80%. So meaning the productivity, and that was far low compared to other economies where they get $1, they invest and get 4. And we've seen that in terms of our capital to output ratio, we're investing in more capital through borrowing, but our output is not growing as, and if you look at the period between 2010 and 2020, our growth levels were on average lower than the historical averages over the preceding decades. So that again meant that while we were going into infrastructure, which was the right thing to do, it was happening at the fast pace, but also replacing. We hadn't invested sufficient in the ability to invest, and that created challenges. And it's until now the debate is starting to happen, where we are talking about the aspects of ensuring that when we borrow, we are borrowing for the right reasons. And the last time I was involved in the public expenditure financial assessment, we noticed that only 38% of the borrowing projects that we were borrowing for were actually going through feasibility studies. And also why, when we started to go and say, if we are going to borrow, the project must be economically feasible. Now, a lot of human development projects in terms of the economic and at the time, quantification of some of the economic benefits, I think, was very difficult. So most of the human development projects were not viable, so they were being pushed on the side. And as such, that also caused a drift from, the social sectors, but we're moving from a poverty-focused intervention and social service investment to now an infrastructure investment. So we had that 10-year period where we invested. So we have 38% going through. But if you look at even current debate and what I was seeing in the media this week is that the number of projects, road projects that are ongoing, but are likely to be suspended because of lack of financing. But these are projects we borrowed for. Now financing is not forthcoming. And the last time I think recently I was reading a report which says our undisbursed debt as of end of 2024 had risen to about 16 trillion. Now, 16 trillion is about 16% of our cumulative debt, and that's quite substantive. If you do not use this money, that means you're paying commitment fees, and we have also seen a rise in those commitment fees. But the other idea, of course, was the emergence of Chinese financing. And you look at the biggest projects of infrastructure that we have acquired over the years. You take at Karuma, you look at Isimba project, all these big projects had been not even adhering to the traditional procurement system. So it was a bit of financing availability that is leading to some of these procurements. And of course, the question also was, are we linking our infrastructure investments to the actual needs of the economy? Of course, we had Wijagali, which came in at the time in the energy sector, but you have Karuma coming on board and Isimba. And when you add these on, you're going to have idle capacity, which we're actually now paying for. We're generating electricity and we are not utilizing. Of course, the economic school of thought remains that infrastructure must lead development, but by how much? Because you have over 800 megawatts that you're probably not utilizing. And over the medium term, if you look at key projects that are coming on to utilize electricity, you don't see even 40% of that to be utilized. So again, it's an issue of sequencing investments along, but I think also the availability of financing, Chinese financing, led to some of these critical investments. And of course, if you're to get a World Bank loan, the cycle of getting that loan was longer. So Chinese financing came in, and it was attractive to Uganda. Now the broader question really remains, and I think Dr. Muhumza has alluded to it. We have had external influence in the past, but if we look at the recent trajectory, it is really more of the domestic forces that have driven a lot of what happens and we've also seen, like, for example, in electro cycles, you tend to see spikes in borrowing, but that borrowing is coming from the domestic economy. We've also seen, alluding to the commercial debt, with the expiry of the Umeme contract, you see we had to get quick financing, which we would source from a commercial bank. So again, these are dynamics that, evolve with the matching of the available financing to the needs that we have. And that has been the evolution. But what we've also seen is that Uganda hasn't gone yet on the market to borrow to issue sovereign bonds from the international markets. And secondly, we haven't seen natural resource-based borrowing, where we are leveraging our resources to do borrowing. So, and I think that was one of the biggest fears, that we would be mortgaging our natural resources for given the emergence of non-concessional borrowing. But overall, the issue of the public debt safety trap, I think, is something that really requires a lot of debate in the current circumstances. And you've seen before where the central bank has also said our debt can only be as sustainable as the available oil revenue stream. But our available oil revenue stream are also not quite substantive, are not quite substantive. So and that may give us that public safety trap. Now, what of course happens, and the challenge is, once you start to clock 50% debt to GDP, we've seen that low-income economies, and there are empirical studies that have shown low-income economies at about 50%. When they go beyond that 50%, then you start to see any accrual of debt has a downside effect on growth and other investments. Emerging economies tend to go between 60 to 70, and then of course developed economies at about 90 and of course that brings in the debate. Most developed economies today are the most indebted economies, but like Dr. Mohomes has explained, it goes to how you, what debt you hold, at what interest rates you're borrowing at. You're not subject to some of the currency distortions, which we have also seen for example, in 2015, we saw a sizable jump in our external debt, primarily because the exchange rate had endured a fast, sharp depreciation in that year. So those are some of, I think, the questions given the time that have been allocated. In terms of the questions, I think the domestic and external forces have been at play. We see increasing reliance on domestic debt, not only in terms of borrowing, but also in refinancing domestic debt, what we call treasury redemptions. And that in its sense is, we call it a refinancing risk. If the market starts to price risk in government, you might see government trying to borrow money and it is not getting it on the market. And as such, those risks will manifest, but also the issue, and I saw the graph Dr. Mohomes gave. I think one of the key issues is the crowding out effect. The numbers I had looked at, Doctor, when I looked at domestic treasury bonds and bills outstanding, the numbers were actually growing faster than the private sector credit. But also looking at the ratio, we saw that domestic debt to private sector had actually exceeded 100%, meaning that government was now a biggest borrower from the domestic market. And that also creates a big risk. One, the interest rate risk, because we are borrowing in double digits. We have seen now these treasury bills are going to, to some of the bonds going to as far as 18%, which is quite a hefty. You don't see many projects, and for most of the domestic borrowing, they go for consumptive operational expenditure for government, not the investment budget. So these are some of the issues that I think really deserve to be put on table, and we discuss them. And I think for the restorative and reparations, I think we do believe reparations is not charity, it's justice. And that's where the debate, I think, should be moving to if we are to discuss the reparations in terms of the broader African continent.
Okay. Thank you. Thank you, Dr. Enoch. People in the other side can do the clapping. We appreciate your submission. I have had one big statement that is a major concern, the issue of idle capacity. Those who studied some literature they remember Animal Farm, where so many people spend so much time on building a windmill only for it to yield not so much. So probably that is what we can consider as an unnecessary. In case we are investing, make sure what we are investing, we are getting adequate return on investment as soon as possible. Now we are time bad, but we have two more presenters, and I'll ask them to be even more precise, and I know they always do. The next presenter is Madam Catherine from AFRODAD. And Catherine, we are expecting you to address the issue of the historical legacies and today's fiscal pressures in East Africa. And yeah, basically that, please address that. We had a number of questions for you, which I discussed with you earlier. Please address us on that issue. Maybe let me precisely guide you on where to address us. One, Madam Catherine, can you cite some or a wide range of colonial legacies that have linkages to current debt dilemmas, and then you suggest feasible strategies to overcome them in the quest for sustainable self-determination and development of African economies. And we said we can even go beyond the African area. Please, Catherine, you're welcome. Some 20 minutes or so. Thank you.
Okay. Thanks, Gilbert, and the entire UDN team for putting together this wonderful webinar. So far, I'm definitely enjoying the conversations and also insights of Uganda's debt are very interesting on the domestic side. As AFRODAD, we're actually looking into that area of, an increasing trend of domestic debt for many African countries. And I think maybe if time allows, we'll can get deeper into that. But yes, my presentation will be focused mostly on the historical perspective of debt, African debt, and how that links to, the discussions now on reparations, which as an organization will be having a more concise discussion on later this month in our flagship conference in Ghana, Accra, Ghana, from the 27th to the 29th of August. I'll speak also a little bit about that in my presentation. So I'll try to just share my screen.
Please, Janice, make sure she is able to share her screen. I hope you have not forbidden her from doing it. So if not, then make sure the presentation with you so that you can present it to us. As she is sharing the screen, please, in case you have any questions, put them aside on the parking lot. We shall ask all of them at once. When we finish the presentation, we shall do a plenary where everybody will make some comments or questions, and then finally we shall give 1 or 2 minutes for the presenters, for the discussants, and then we close. Thank you. Catherine, please go ahead. I can see the presentation is actually being projected.
Okay. Thanks, Gilbert, again. So my presentation will be categorized in 3 sections. We'll have the historical context of Africa's debt and how that led to what we are currently experiencing and advocating for a change, which is the global financial architecture. And then how do we make a case for reparations in the context of reforming the global financial architecture, saying that it has that a historical and colonial legacy. And then how do we now move forward, like you have suggested, Gilbert, for me to cover on feasible strategies to overcome the debt situation in Africa. So this is just a snapshot of Africa's current debt position, although the statistics as of 2023, how the trajectory is definitely on an upward trend. As of 2023, Africa's debt was at 1.8 trillion, with a majority of it, the external debts, accounting for 1.12 trillion. And in the current statistics, 9 African countries are actually in debt distress, and 11 others are at high risk of debt distress, while 4 have already defaulted as of 2021. We had Zambia, Ghana, Chad, and Ethiopia, and they're all actually undergoing a restructuring under the G20 common framework. They have been Some have received relief under the framework, although it's not complete relief because of the challenge of private creditors. Though my presentation today will not allow me to go into that. But yes, 4 have already defaulted and undergo restructuring. And the share of African countries where the debt to GDP ratio is increasing to which is
your screen is not moving.
Sorry,
your screen is not moving.
It's not moving. Oh,
Yeah.
sorry. Okay, just give me a minute. Okay. Sorry, it's not as broad. I was presenting on my end using my own slides, but I think this is also fine. Hopefully, the audience can be able to see. Yes. Okay, yeah, so that is just a snapshot of Africa's debt, like I was explaining. And many African countries have their debt to GDP ratio over 60%. This has been an increase since in the last decade, moving from 25 to 46 and now currently at 60%. And then the Africa region, according to a recent report that UNCTAD actually did, showed that Africa's debt is actually the most, or rather it's growing faster compared to any other region globally. And this is because of the high interest rate hikes that we've experienced, especially post-COVID. And also that it's averaging 10%, which is the highest compared to developed economies at the rate at which they are accessing debt or debt financing. And because of that, African countries are now paying up to $163 billion in interest rate service alone. And this is compared to, if you look at that statistics, it's more than the debt that we actually had in the 1990s. And this is only in debt servicing alone. And in that context as well, we can see that interest rate alone, because of the steep rise, interest rate is worth 61 billion USD, as the same statistics provided by UNCTAD in 2020. So Africa's debt basically, because of course, the global context, emerging issues, multiple crises and shocks, it has led to a significant increase to the current debt situation. But aside from that, we could go back and see how the trend of Africa's debt has been in the last 10 years and beyond, looking at the colonial legacy that has actually aided to a very great extent to how African countries actually accessing debt, how they're using it, and how they still are in a perpetual cycle of indebtedness. And maybe to just understand that and to understand the debt financing architecture and the players, this is just a small graphical representation. When we speak of the global financial architecture, who are the actors, who are the ones who make the rules and the decisions? And we'll see in the presentation, many of them are the same people or organizations or countries that were very much involved in the colonial period. So the yellow circle represents, of course, the international financial institutions. Sorry if it's a little bit, the slides are a little bit small, but international financial institutions, these are your the IMF, the World Bank, Afri-Exim, and the like, if you want, in the regional context. And then we have the non-financial institutions or actors who also play a very big role within the global financial architecture. And of course, with the problem areas are the ones in the red, where we have, for example, credit rating agencies who are very influential in the kind of or determining the how we access debt or debt financing, the interest rates, because of the perception. They have a very big influential role in determining the perception of you know, the country's economic situation. So this is just a representation to understand what the when you're referring to the global financial architecture, what that really means. So to just go now into the historical context of Africa's debt, and how the foundations of the global financial system and the current indebtedness that we experience as a continent, and I think even broadly the global South, because they have elements of also colonialization, not extremely, but also there are just some elements around that, is that between the 1500s to 1800s, of course, we had the transatlantic slave trade, which was the earliest large-scale global economic system. And it was very much a source of capital accumulation for, you know, countries that were involved in the slave trade business, which led to the development of the banking system, the trading systems, even as we know them. So if you say there, we have like the Bank of London, the Lloyds, the likes of Barclays, who really profited from the slave trade in those times, and to building their trading systems as they are currently. It was also a period of industrial revolution, as we know, where there was a lot of extractions of resources from the slavery-funded plantations. And that a lot of that was exported to these countries to finance their industrial interests at that time, which is also known as the Industrial Revolution, and to develop their industries, particularly in Britain and Europe. And it's also a time where, you know, the concept of insurance and banking systems really started, right? Where slaves were actually insured when they were being transported in slave ships as human cargo. And then during that period is also where the trade routes were actually very much defined between Europe, Africa, and the Americas, and has informed many of the trade patterns as we know them currently or presently, and the credit rating systems that arose from those trade networks. So that is between the 1500s to 1800s. Then you move to now the beginning of the 19th century to mid 20th century, where now colonialization, especially of African countries, really took place in a very broad scale, where you had institutionalized unequal economic relations. And this basically means when the former colonial governments, their method of economic processes really entailed extracting raw materials from African countries, exporting them to build their economies back home. Many of them were actually coming out of the World War I, II sort of effects, and they needed the resources to rebuild the economies. It was also a show of, you know, control of resources, but majorly in addition, exploitation of labor, which, because it was cheap to get, in addition to the resources, labor provided by the slaves, but also the colonies themselves, the citizens of the colonies where they were operating, provided labor to extract and export these materials. But it was also a time of setting the rules of monetization and financialization. So this basically means what we know as the global economic system right now really took shape between this period. For example, in financial institutions like the World Bank and the IMF, what is now then referred to as also the Bretton Woods institutions, they were formed around this time, and they were able to position themselves in providing that rules or roles as far as monetization and finalization is concerned in a global sort of context. And then, as we go to within the presentation, you'll see how that really affected or influenced the role of debt and the uptake of debt within former colonies during, of course, the colonization, but post independence. And then you have at that time also extraction and taxation, where colonies were, like as I've mentioned, integrated in the global economic system as raw providers of materials, raw material providers, but also they were captive markets, right? You see how we were subdivided into countries, boundaries, and these former colonial governments would, decide among themselves who would take what portion of the continent, what they're going to do with them, what their interests are in terms of the resources that were available. So we became captive markets for these former colonial governments, and it was also a form of them to now extract taxes to fund their imperial state and reconstruction agenda at that point. So it was also just a way to limit monetary sovereignty. Of course, now colonies moved to a cash-based transaction system, which was very foreign to us as a continent. And now it was a way to reinforce dependency on colonial masters, right? Because I think our trade mechanisms that time was mostly it's the barter trade system. It was exchange of goods, not necessarily cash-based economy, but the colonial masters found this to be a way to reinforce dependency. So moving now to still 19th century to mid-20th century, I've mentioned how it was the time of the creation of the international financial institutions, and yes, they were designed to provide stability and to rebuild European economies, but at the back of its former colonies, African colonies. And what this brought about is the neocolonialism, as we've seen it how it is taking place today, where with the creation of new states and even constitutions and leaderships, it did not really bring about true independence. Rather, because of the monetization and finalization that these international financial institutions, it led to independence, dependency, but also a weakening of sovereignty of these new independent states. And it was also a form of economic and political control, because many of these, by the time the IFIs, the Bretton Woods institutions were being created, the former colonies were still under colonial rule. They did not participate in the decisions to create these institutions, and therefore, when they began operating post-independence, they did not have the autonomy to make any decisions to influence how they access money or debt in terms that would be favorable to them. And then
Thank you, Catherine. Catherine, I see your presentation has a few more slides. We are giving you some 7 minutes or less, if you can fast track. We have some limited time in terms of allocation for the day, but please proceed. Sorry for the interjection.
no problem. I'll try
7
and
minutes
rush
to
through.
go.
Yes. So that is just a historical background of the formation of the global financial architecture. And what this brought about is the injustices that we're facing as a continent, because one, it was built on rules rooted in colonial legacies, right? That really promoted extractive tendencies. And I've seen from Dr. Fred Muhumuza's presentation, even with Uganda currently, we are seeing an increase of import and a decrease in export. This was a very intentional systemic design to keep African countries in that perpetual state of, exporters and not co-producers of finished goods. And then you have a system that prioritizes creditor interests over structural transformation and development interest of African countries. And here, this is where I maybe provide some examples, as Gilbert, you had indicated. For example, Uganda, it inherited a dual economy from its former British government or colonial government, which was a cash crop sector, exporting coffee, but in turn it neglected other food crop sectors, which really forced Uganda, once it got its independence, to borrow to be able to develop these other sectors or food crop sectors, and also to widen or broaden its economy. The same happened to, for example, Kenya, which was also a former British colony, mostly exporting tea and coffee, but also at the expense of neglecting other food crop sectors. But as they got independence, they realized they had to expand their economies, and to do that, they had to borrow. So, and this cycle goes on and on with other former colonies like Nigeria, Chad, Algeria, and so on. So you can see even post-independence, African countries were forced to borrow, and in turn, this led to prioritization of creditor interests to finance their structural transformation. But the global financial architecture has led to a draining of African countries' resources. We are losing annually $90 billion. And also the cost of accessing finance, like I've mentioned, has become now very expensive, but it's also not within the influence or control of African countries to determine the rate at which they can be able to access affordable financing to build their economies. Even with the debt restructuring, like I mentioned, it is still not a framework that is favorable to African countries. I've heard Dr. Fred Muhumuza mentioning that even though we went through HIPIC, most African countries underwent HIPIC. They still find themselves in situations of indebtedness, but this is still a systemic design, right? To keep African countries in that structural, space of recurrent debt. So debt relief has not really provided that adequate fiscal gap for countries to reform or transform. And if debt restructuring happens, it's always with conditionalities, and it actually replicates the experiences of the failed. Yes, Gilbert, I'm just winding up. So with the injustices of the global financial architecture, some of them is...
I have 3 minutes. We have be closed out. Yeah, thank you.
Thank you, Gilbert. Other injustices that you've seen with the global financial architecture is, like I mentioned, with the international financial institutions, we did not have equal representation or even voting rights. And even the global economic rules were made without African countries. This has led to policy conditionalities, or us being forced to take up policy conditionalities, undermining our sovereignty, and eventually, and this is very much being expressed in many African countries, a cut in public services and social spending. But also, most important is to note that it's this cycle of debt dependency as a result of the global financial architecture and its historical colonial legacies. So how do you make a case of debt and reparative justice? It is to have, how do we frame reparative justice in the context of reform of the global financial architecture, but also to transform our our economies. So with reparations, we are putting forth a narrative to say that reparations and reparative justice is valid because there were injustices experienced. We've looked at the transatlantic slave trade. We've looked at the injustices of post-independence, where we were not able to sufficiently grow our economies, but had to depend on borrowing. But it's also to highlight that the injustices that are being perpetrated in the continent are that we deserve to be paid back from what we have lost, and that those who have perpetrated those injustices must either repay in material or in a moral way. So we do have a case to make for reparations based on what I've just spoke about. But it's also to have a political ideology and philosophy, right? To say that with the neoliberal capitalism and extractivism that was brought about by colonialism, has not achieved the objective of African economies, and that's why we need a new framing. And at the center of all this are the people, right? Like I've mentioned, debt is leading to public spending cuts. People are not able to access health or education in a sustainable way because we are in a debt trap. So at the center of this is to restore people's dignity and African citizen without further mortgaging their future. And the pathways to these reparations frameworks, as an organization, we have been developing this narrative. Besides saying reparations is costing damages, whether it's present, historical, present, or future, but it's also how do we manage our debt sustainably. I think is it Enoch who has mentioned that we have a role as countries to use debt in a sustainable way in towards building economies and not necessarily for our government expenditure, right? But it's also how do you admit that reparations are due to the continent and her citizens. As organization also, we have been working towards what we call the African Borrowing Charter. And this basically defines the principles of proper debt management for African countries in a way that is sustainable. We have the Harare Declaration, which is just a political economy framing of Africa's debt, including the Maputo Manifesto, and it's also supporting the African Union frameworks within the Abuja Treaty and Agenda 2063 for the Africa that we want. And most recently, the African Union held a debt conference in Lome, Togo, which resulted to the Lome Declaration, which is basically Africa's position on debt and what should change for us to move from that cycle of indebtedness. And Gilbert, I'm just about to wind up. So what could be our demands as we look at this framework of reparations is to say we do not want financial reparations, right? We want true structural reforms, which can only happen through the reform of the global financial architecture. Case for a conditional cancellation has been made for illegitimate and unjust debts. And this, if you look at the context of colonial governments, they did borrow to develop, of course, infrastructure, but that infrastructure was not to benefit the local citizens, but to develop the economies in the Western countries. So because of that debt that was borrowed and debt and that we're still repaying, there should be unconditional cancellation of that because it was not used to facilitate development of the continent. It is also a call for reform of these international financial institutions that I've alluded to. In the climate context, we've had many civil society organizations and governments as well calling for climate reparations, right, through the establishment of a loss and damage fund. But also in the context of debt, the only way true reform of the global financial architecture can happen is through establishment, a UN framework convention on sovereign debt, which basically outlines the principles and rules of debt, sovereign debt, how debt is acquired, how debt is utilized, but also responsible lending on the part of creditors. And this is just a framework to on what the sovereign debt framework convention on sovereign debt would look like under the auspices of the United Nations. I will not go into the AFRODAD right now. Maybe I'll have opportunity to speak on that later. But thank you so much, Gilbert. Back to you.
Thank you. Those who know how to clap virtually, please do clap for Madam Catherine. It was an elaborate presentation. I have liked the last that structure, that house, so to speak. If you can give a room to each of us out of that house, you want to have a copy of that. Now we are approaching Hilda, and a few issues I have picked, very many issues out of Catherine's presentation. Principally, she said that a number of countries in Africa have already experienced debt distress. About 4 others have already actually defaulted. So many countries, including Uganda, have ever got relief, and many African countries are actually currently having more than 60% of the debt to GDP ratio, which exceeds way above the threshold of 50%, which is recommended. So given that, we are transiting directly into the presentation from Madame Hilda Tumuhe from Siatini, and she's going to address us on the topic of rebuilding physical sovereignty amid debt legacies and the rise of infrastructure-led borrowing. And Hilda, I'm presenting these particular questions directly to you as you are presenting in your 15 minutes that are remaining before we go to the plenary to get more questions and comments. Please answer the following question. Some pundits and political economists have severally called for reparative justice, and some members here have also mentioned the same, as a means for our extrication from debt entrapment. We have been entrapped, as Catherine has mentioned. So, but it seems all to fall on deaf ears. Now, beyond rhetoric, what compelling case can we make to devise and elicit the responsiveness from MDCs and lenders to make debt justice more of a reality than a myth? Hilda, please, the mic is yours. Thank you.
Thank you so much, Gilbert, Dr. Enoch, Dr. Mhumza, and Catherine. for that elaborate presentation. I'll try so much not to repeat what you said. Yeah, but maybe just giving a little context and re-emphasizing some of the aspects. One, when you look at, it's not by coincidence that you see almost all the countries that actually attained debt relief in the early 2000s. Today, they are either at moderate, actually majority of them at moderate debt distress, and some are already in high debt distress, and others have defaulted. And this is not just by coincidence, but really clearly reflecting that either the debt relief did not work largely, but also on the other side, looking at how our governments are utilizing the resources. That's why we could be back in the debt trap that we were trying to solve with debt relief. So, but keenly, I want us to point to the fact that the people that gave us relief, the institutions that actually gave us relief, had not entirely, how do I call it, a spirit that would actually push development, while some parts we are to blame as African nations. On the other hand, we can raise clear pointers to a systemic 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 pointers.
There's some feedback. In case somebody please mute yourselves, those who are not presenting, so that we only listen to one person.
Yeah, so
come on, Hilda,
sorry
please go
about
ahead.
that. I don't know what happened, but yeah, to a systemic structure that have led to this kind of problem. Take as an instance of the International Development Association of the World Bank that was largely created to help poor countries access soft loans, concessional loans, concessional financing. Of course, when you look at the structure of IDA, it's more of a replenished fund, and by IDA members, definitely. But largely, we see that even this very concessional fund is now incorporating what we call the private finance. It implies that the IDA private window cannot lend at low rates as the initial concessional funding would be like to low-income countries like Uganda. So this increasing cost of borrowing that is largely framed by the international financial institutions largely also accounts for the increasing external debt burdens in some of our nations. So, and to make matters worse, when you look at what frames, at what cost do we borrow as African nations, we have the whole aspect of credit rating agencies. I think Catherine has alluded to this, but I want to speak to the fact that these are just single monopolies in the market, and they are giving out your credit rating that is going to determine how much the private sector is actually going to lend you. No wonder you see that by and large, many countries cannot access concessional finance because it has dwindled. So they keep running back to access the non-concessional borrowing. So, and with this, we see that they are spending a lot of their revenues on debt financing versus spending on crucial investments like education and health. So just going direct to the question Gilbert posed to me, what are the feasible solutions such that our governments can actually claim reparative justice? We as Siatini, we propose a two-bodied approach, whereby we have an approach of the government where we clearly call for prudent utilization of public resources in a manner that is going to help the economy gain a higher rate of return, but also be able to boost growth, but in an inclusive manner to ensure that we tag public finance to human right approach. Like we get a human right approach to public financial management, that in the event of debt justice at national level, what is the oversight role of Parliament? How are we acquiring these debts? Dr. Mhumza alluded to the whole aspect about domestic debt in Uganda being a problem. We have clear rules in the public debt management framework at why are we borrowing, you know, why should we borrow domestically and at what rates, and when should we borrow? But we continually see that government still relies on domestic debt to finance recurrent expenditures, and of course this automatically affects it definitely crowds out other the other public expenditures like health and education. So on the other hand, when you look at the other side of the framing of the international architecture, one, when you look at the structure adjustment programs that were posed to us, of course, these came with conditionalities like privatize your economies and all that. We privatize the economies. Of course, one of the most common case currently in Uganda is where we gave out about a 20-year concession to the Umeme, but at the time of buyout, you can imagine how much government had to pay back. I think in this year, government had to borrow about 200 million USD dollars to buy out Umeme, but at what rates? Now imagine Umeme came into the market and they have been using money from the International Financial Corporation of the World Bank to make some of the investments. And of course, now this IFC window of the bank does not lend on concessional terms, but rather on market rates. It implies that the cost of investment they are making in Uganda is large. So at the time of buyout, government will have to spend much more money to buy out the private sector to take over the power distribution role. So some of these framings are some of the cases that we can actually argue out for the clear reform of the financial architecture, whereby we clearly say, yes, World Bank, IMF, you've done some part. You thank you for the good work, but it is now time to have a multilateral debt framework under the auspices of the UN that will be more neutral, you know. So even when it comes to issues around the credit rating agencies, yes, a clear case can be raised on the fact that we saw our presidents gathering at the African Union, I think in February this year, to come up with what we call an African credit rating agency. So we just need political buy-in, and also when it comes to the human capital, how do we support this agency? I think they're supposed to start some of their ratings by either end of by September this year or early next year. So it is very important to have pure regulation of some of these agencies such that we reform the entire system. Then on the other side, we still have the colonial legacies, like Catherine has alluded to the fact that they framed what commodities we as Africa are supposed to trade in. And of course, our export base has not been good. That's why sometimes and largely we rely on borrowing. So you look at the global trade systems that are largely that have been structured in a way that Africa has been left as a commodity dependent, as a key exporter of raw commodities without adding value to the economies. A clear example is the recent tariffs, particularly when you see between US and the other nations, when Uganda is saying no more export of our valuable materials in raw form, we see retaliatory like reversal tariffs on some of our commodities. Of course, this is going to really affect. So what we are saying, can we build the African Continental Free Trade Area that in the event that, but we approach it in a reparatory way, that we as Africa, we able to negotiate as a bloc and send out commodities to the international market in a single way, such that we gain more from our trade. And could we have streamlined policies on what we should export and in what form, and at what rate are we selling out there? Because we as a continent, we are really mineral rich. Then when we look at aspects of ODA, definitely, while we see that it has taken a reversal trend in the recent times, that the official development assistance is reducing, and countries are saying for them they are for trade, but we still go back to the commitments that we made, the 0.7% of GNI of the economies to Africa, to low-income countries should actually be fulfilled. This will enable African countries to actually have more resources rather than leveraging on debt financing all the time, which is very expensive. But as a debt movement and a debt justice movement, our key point here is on a call for a multilateral debt framework under the auspices of the UN. Of course, not shying away from other factors that can actually also affect our economies, like tax, whereby we see the framing of the taxation system of the world has largely been skewed to help the global north economies against the global south economies, whereby they have more taxing rights to the multinational corporations that invest here. So by and large, you see that these are moving out with a lot of resources. That is why we as the Africa group are, of course, supported by the civil society, pushing our governments forward. They proposed for reform of the international tax architecture, where they were proposing to have a UN framework convention on tax cooperation. And of course, this would help us to discuss about things of the taxing rights, food taxes, is it by source or by resident-based taxing? And clearly we see at least this discussion is taking shape, and I think the negotiations are currently on. So a reparative way here would call for our governments across the world, even those like the US that are trying to move away from some of these discussions, would want them to come on table such that they provide reparative justice for Africans. How long are we going to keep having multinationals derive wealth from our own countries, but they do not pay their fair share of tax? But on the other hand, the tax burden is slapped on you and me and the low-income earners in the communities. This doesn't speak to equality. So for us to be able to achieve the sustainable development goals, it calls for innovative, human just financing solutions from false solutions. I think Catherine talked about the debt restructuring that is so lengthy and is really not taking shape as several creditors are not coming on board. How do we have a reformed entire economic architecture that will provide justice for all people in the world? You know, how do we have that fair, just system? It all calls for reform, and a reparative system for Africa cannot be claimed on financial reparations that let them pay us without a reformed economic architecture. That will not work. Why? Even with HIPIC, when they forgave our debt, we see that it favored more of acquiring more loans, but rather instead of favoring the structural transformation of the economies. That is why you see that our economies, even when they accumulated, even when they attained debt relief, our debt has surged. And maybe the other form of reparations, when it comes to, as we are still using the systems of the financial institutions, when it comes to aspects around the debt sustainability frameworks that are provided to us by the IMF. That is why you find that while our debt as Uganda could be sustainable according to the debt sustainability framework, we still see our government struggling to actually pay back the debt and also meet the day-to-day expenses and priorities of the citizens. Why? It means that either the framework has some loopholes. Let us take a case of the COVID-19 scenario, but also the climate disasters that happen. Some of these factors are not included in some of these frameworks. So that is why we are saying, could we have a reform? How can we revise? Who even sets the rules and the methodology that debt sustainability should look like? So can we be on table as Africa? And this can only be possible with being under the auspice of the UN. Thank you so much. I'm open to any other questions from the audience and any additions. Thank you.
Thank you so much, Hilda. That's why you can see in the other side, people are giving a big hand clap. I note you have observed that we have a two-pronged approach to the solution to this, because definitely these institutions cannot, they are standing on the benefiting side and they have the whip, as Trump said, we have the cards, they have the cards, but we don't have cards. So you have proposed some way of moving around it. One, you have indicated that we have, first of all, to have an inflection and have prudent utilization of the resources that we have using a human rights block. The double tax agreements, Trump has been having that issue of using taxation to get what they want. Are there some of the rare minerals that we can use also to see how we can be recognized on the international scene? There are many others, and you are suggesting also exploiting our presence at these international forums, EU, UN, and the like. So now we are coming towards the end, and we are allowing questions and comments from the plenary. Raise your hand, and also, if possible, write some questions or comments in the chat room. We have a few people we shall allow. I'll pick the ones that come first. So when you shoot first, you know chances are that you're the one who is going to be picked, and then we might miss an opportunity. We have around eight people. You give your comment or questions if you have any. I'm not seeing any currently. If we don't have any comments or questions, then we shall ask the panelists to get 1 or 2 minutes of summing up. Janice, can you help me identify? Oh, Joyce has been raising her hand since time immemorial, but Joyce, Joyce, do you have a comment or question?
I have a comment and a question.
Please go ahead.
Can you
because
hear me
yours
now?
has
Because
been
last time you couldn't hear me. First of
we
all,
are hearing you. Yes.
I want to thank UDN so much for following me up forevermore. Amen. And after an absence of nearly 4 years, being able to attend this particular discussion, which is of great interest to me. At my age, I have seen Uganda function with the minimum debt, at one time with no debt at all, and life seemed to be manageable. So my concern is, out of the suggestions which have come out of this discussion, how much as a civil society are we going to go back to the strategies that we had picked up of the black book, where we have to, as we were advocating for debt relief, we were also advocating against corruption and stealing of this money. My worry is that half this money for this country, even more than half, doesn't do what it is supposed to do. So continuing to borrow or not to borrow is like you continue to borrow in order to enrich and grow a certain middle income society. The level of corruption
Yes,
and
thank you, Kano. We can hear
too
you.
much. What can we do to revive that strategy of advocacy against stealing this money?
Yes, we have had a question related to the IGG who has said more than 10 stolen annually. Okay,
Yes.
any other person? That question I think will be addressed by any of the panelists. Thank you. Someone help me identify any other hand that could be up.
There's no hand up at the moment. I think the panelists can go ahead and answer Joyce's question.
Okay, so we are going to, but in case there are any other comments or questions, please put them in the chat room. We shall read them out. But we are going to give a minute or two to the panelists, and we shall go in reverse order. We shall begin with, let Hilda first breathe, then we go to, we shall begin with Catherine. From Catherine, we shall go to Hilda, then Dr. Enoch, and finally, Dr. Muhumuza. Catherine, I give you 1 minute, and then an extra minute if you promise that you are going to invite me in the AFCOD 5, I'll allow you to present an extra minute. Please respond and give your summary. Thank you, Catherine.
Gilbert, I thought you already have a ticket and coming. So you're very much invited, and I'm hoping to see you there. But thank you for the question. Yes, I may not be able to answer on the corruption side, and maybe I'll let Enoch or Dr. Fred Muhumuza or even the UDN team to speak on that. But I'd just also say that beyond issues of corruption, we also have to recognize as a country, as a continent, we are losing more through this system, in a system that you're calling that it's unjust, it is not working for the continent. Like I mentioned, beyond even us spending more on debt servicing, we are losing money in illicit financial flows. And corruption, yes, is one of them, but there's also issues of avoidance, tax evasion, and this is perpetuated by those multinational organizations based in these countries, who are also the designers of this financial architecture, financial system that continues to put us in that system of indebtedness, but also we are losing money. So beyond the question of corruption, I think when we deal with the financial architecture problem, then Africa is well on its way to be in charge of its resources, in charge of its sovereignty, economic decision sovereignty, away from this system that definitely is not for us, right? So we need to also recognize that. But I think in the national context, like I mentioned, the only way to avoid that also debt trap or budgeted corruption, right, is to have frameworks like that work for proper debt management. Like I mentioned, we do have the African Borrowing Charter, and it outlines principles for members of parliament, ministers of finance, and even the people as members of the fourth estate to hold these institutions accountable. So we all have a role as citizens, as members of parliament, and even the responsible institutions within government, to make sure that debt is used responsibly for productive sectors so that we don't find ourselves in that indebtedness. Just to wind up on the issue of reparations and why it is important in this context, is to say that slavery, for example, has been identified as a crime against humanity. Yeah, by that mere fact, we can say reparations is due to Africans, right? That it's automatically justified. And because of the system that was designed that brought about slavery, and that we recognize that was an injustice, then also reparations should be due to us. And that is why at this point in junction, and I think even the African Union has seen it fit to bring this as a very important conversation, and to bring now more intellectual, political, and social awareness on reparations in just another way to fight against this unjust system. So I think I just encourage the participants to really think about it in that context, right? And why we need to demand for reparation. So those would be my concluding remarks, and invite everyone to Accra, Ghana for the main conference where we'll be going deeper into this conversation. If you're not able to join, the sessions will be streamed online on all social media platforms. So please join and follow and share any thoughts you have on the same. We'd be happy to hear about that. So thank you, Gilbert, and the entire UDN team for organizing this and having me. Thank you.
Thank you, Catherine. Now you are 1 minute. Good timekeeper, Hilda. Or you want to donate your time to anyone? Please give a summary, a comment, Hilda. Hilda seems not to be present, so we are giving an opportunity to Dr. Enoch.
Thank you,
Hello?
Gilbert. I think Gilbert, thank you. The conversation today has been quite enlightening. And I think in summary, I think what we alluded to is that the debt to GDP and debt sustainability framework is necessary but not sufficient. And I will give you an example for Uganda. When we were constructing the oil roads, initially what was put in the debt profile as future flows tripled in the next debt sustainability revision. And that's what we've seen with countries in Africa. They are debt sustainable at moderate levels, but when you get the actual figures in terms of what manifests vis-a-vis what was planned, there are quite big deviations. And I believe like the roads now that we have, for example, if you look at Kampala and PG Express, because of the delays and the current non-construction, this will lead into cost overruns, some of which we haven't factored in this debt sustainability framework. I think the trade imbalance, the whole idea of the Prebisch-Singer theory, where okay, so
don't worry.
Mwiza, you're not muted. Mwiza, you're not muted. Okay, so I think to really wrap up, since I have 1 minute, is about the question that on corruption. We get money, but it's not delivering us to our intended goal. I think corruption is many dimensions. It's political, it's institutional, it's data frameworks for tracking. It is a number of things that really have to be dealt with. It's also a system issue that has to be dealt with. So it's a number of things. I think we now have digital platforms. We have institutional and legal frameworks. We have platforms for demand of accountability. So it's a broad range that really we need to deal with if we're to deal with corruption. That's just it's a broad topic. So I think I can't summarize a strong recommendation in 1 minute.
Thank you so much, Dr. Enoch. And as we come towards the end, I don't see any questions or comments in the chat room or anywhere. I'm going to request, let me just recognize the people that were present, and then we give the opportunity to Dr. Muhimuza to close. We had so many people, including Andrew, thank you, Atuhura, Batha, Canon Joyce, Catherine, Constance, Anna Tabo, Enoch, Fred, Grace Inomjisha, Jackson Wandera, Janice Shimana, Justin, Rubo, Sheila, Joshua, Abidness, Michael Odeke, Penny, and WV. Thank you. So we are requesting now Dr. Fred Muhimuza to give your closure comments Thank you for the keynote address. Go ahead and give your final submission.
Thank you, Gilbert, for the moderation and everybody for this participation and the ideas presented. I think for me, we are alert to what is happening. We are also alert to what should be happening but is not happening. And that, I think, was partly my argument that the debt forgiveness was not more of it didn't work, but actually that is the whole point, that the conditions in which our debt was reduced to, in the case of Uganda, less than $1 billion, and now we are back to 23, and we can't account for how we have gotten to the 23, means that we have more fundamental things than just changing the debt acquisition architecture and the access, because part of the monies we have received over the years was actually grants, so it costs us nothing, but we can't even account for the grants. So we cannot only go out there and blame the rates at which we are borrowing, the terms at which we are borrowing, when you can't even account for what came out of the grants. It begins to speak to what other conversations have come on the table, the ethos of corruption, the issues of odious debt, the issues of money just being squandered, and by the leaders putting accountability measures in place that cannot be referred to effectively as accountability measures. I hope people have been watching and following up. Even in Ukraine, under war, they were receiving donations and people are literally inflating the purchase of drones by 30%. These are government officials. Now, when the accountability institutions began to raise issues, Zelensky himself decided to issue an executive order to ban and suspend all these accountabilities. Now, thank God for them. In their case, there were voices that could not be silenced, and he had to withdraw his executive order. A week later, or less than a week, a report was given that one of his members of parliament was corrupt, and he was trying to shield those persons. Now, you may want to say, why was he shielding that person? Could it be that Zelensky himself is questionable? Now, for me, these are issues that we can receive the money even under fair terms. We can develop the Free Continental Africa Trade Forum, but what is the system that is supposed to translate these monies into tangible results for the population? If you're talking about justice for the oppressed, justice for the underprivileged, not even reparations will help if we are still in this condition. So I really appreciate the broad nature of what we need to be doing, the governance, the accountability, protection of human rights, ending these emerging wars in Africa. I was trying to compile the list of wars in Africa, but that was not part of the terms of reference. But it is good to look at that as well and how it is draining resources that would have gone into development. There are so many wars in and around us, the forces that are being used within countries to really quell the voices of the people. We have stories in Kenya, stories in Tanzania, stories here in Uganda, and you can list all the neighboring countries, and all of them will be in there. So really, if you're talking about justice for the oppressed, for the underprivileged, and development that's inclusive and sustained, the conversation of debt needs to get back to institutions and policies. As I said, the policies were wrong, the institutions are wrong, then the financing can't be corrected and correct the entire problem. So I'm glad to have been part of this conversation, and we'll be happy to broaden up these conversations. And I hope we can even evolve some thematic areas out of this and zoom in to focus on each of those, because these were really touching the highlights. Thank you very much, everybody. And back to you, Gilbert.
Thank you, Dr. Muhumuza. As we conclude, I fraternize with my auntie, Canon Joyce, and I recognize within the panel, within the attendance, there was somebody from Uganda NGO Forum, some lady friend of mine called Juliet Akelo. She's actually also one of the aunties on public debt discussion, and I'm giving her a task. Most of us are in response to Canon Joyce Nima's question that as civil society, what can we do in terms of addressing this issue? And everybody who has spoken has talked about issues of governance and accountability. NGO forum used to bring us all together under the Uganda Governance Monitoring Platform, UGMP. If you could revive that, at one time you did something about whether Black Monday or whatever, bringing us together. The issue of governance has been recurrent, and we need to come back together as civil society and answer the question that Canon Nima has raised. Thank you. We have to appreciate the presentation, the panelists, Dr. Muhumuza, Dr. Enoch, Madam Catherine, and Madam Hilda. Thank you for the presentation. Thank you, Penny Naiga, for coordinating the whole exercise, and Janice for the IT work. Catherine and Hilda and Esther were also part of the organizing committee. We thank everybody. Thank you so much. God bless you. We sign off.
Thank you. Thank you. Thank you for having us.
Thank you, Gilbert. Bye, everyone.
Thank you. Bye.
Oh.